year to date, January 3rd update, Nasdaq Composite for the SMF trader base, that means the market makers and other clientele, is that once again, when we got to this topping diminishing pattern that we had talked about, why the reversals were going to come in, and they finally broke this handle right up here, this where that resistance was, and they made this top. Now, we were shorting it because a top meant that everyone was in. Why? The weekly diminishing volume at the price highs combined in the Nasdaq Composite said we were going to go lower, and we did. And when this little narrow range topping pattern was being put in, we were aggressively getting short the overbought names. And that you can clearly see that the 2012 weekly Nasdaq Composite bull run started when you had 4 weeks above the blue line, the 10-week moving average, 1, 2, 3, 4. This is right where that bull is confirmed. And that you'd closed above it and that the bull trend was in play. However, at this level, we've undercut it. This 10-week now, when we were shorting at the highs, the 10-week has rolled over, about to cross over the 20. When the bull run was in play on standard technical analysis, we use our own platform that tells us exactly where we're at. I will tell you that the calendar yearly trend, year to date, is that the bear is more in control than the bull. And why do I say that? Because at 28.3430, which is up here, that's going to be the even point. Right now, we're below it. That means that the whole trend cycle between both parties, both the bull upside was a great move, and then the bear reversal side, and we're in bear territory because you're 1, 2, 3, 4, 5 weeks closing below the 10-week. 10-week is crossing over. That's what institutional people look at. Hedge fund managers look at things like that. Even mutual fund managers, people that have a little bit of savvy to them, is that the European news has not done well. And this is where we're at right here. This is where that gap up was right here. And this is where the run was to that reversal right here. And the minute that we started trading on the other side, we said, well, there goes that bull run to a bear. And we started up here at a 4-week resistance level with the confirmation of the weekly selling level, the gap down, the narrow range week with another big gap down, and then it led us right here to that 50-week moving average. Now, between the bull and the bear is only slightly in control. Not by much. For the year-to-date overall bull side and bear reversal. You make money when it goes this way, and you make money when it goes this way. But you have to know how to do that, and that's all good and well, and we do. What I will tell people is, depending on what the U.S. government does here, and what Europe does, what Ben Bernanke does, what Mr. Geithner does, what Mr. Obama does, poor guy got beat on the jobs report, so be it. 10-year is at all-time lows. There's some bull cases, and you got oil and gas coming down, and every new bull that started in a calendar year has to have a shakeout. And this is not abnormal, but most of this is austerity and pessimistic. All your big professors and everybody told you at year end that the Dow was going to be at a certain level, and the S&P was going to 1,700, and the Dow was going to 20,000. And even some of the most bears at the time had turned bull during this bull run. And right now, what's going to happen between the two parties is we're going to sell down, and we'll find out what happens with the European contagion. But we're looking at the 100-week moving average on the Nasdaq Composite as support level, which would only bring it right back down here to where the 100-week moving average acted as support in the bear 2011 lows. And that the type of reversals that we have had from the swing high, which was right here, and that was way up here at this, where we said in our videos that the Nasdaq Composite was going to have trouble right around 3,200. And why is that? Here's why. Because when you go back over here, and I will do the monthly chart now, This is a monthly chart of the Nasdaq Composite. You're at the lows. You're at the half monthly bar. You're falling below the 10-month moving average. Your biggest part of the breakout, my friends, started right here above that 10-month moving average to the high top of that reversal on this monthly big sell down. This was the calendar 2012 snapshot, and 2658 is the lower end of that 2012 monthly bar where that great bull had its 90 days in the sun and basically got up here in that reversal that we called for, and we did, and we told people, please don't get involved at the highs in these runs based on stimuluses and worldwide banking systems and all of the stuff that could really turn the market, and that's all political and media. So basically, we don't care. This is where we're at. The bear has a little upper hand. We're at these key monthly moving averages. If there is a resolution and the Federal Reserve gets QE3, they get some more stimuluses, growth contractions remain at low levels. We are going into the summer period where generally after June 21st you look for summer rallies. We've definitely had the bull cycle and the reversal cycle to it. We're slightly into the bear. We'll be watching where the key levels of support. But most importantly is the fear factors that are extremely high levels. And this is why, look at the downsize of that monthly down bar. So when you got to the top of the buy side, look at the monthly buy. This is greater going down in value than the monthly breakout that was going up in value. This one here is. Now, granted, that June will start, and we're going to be looking at where this rally could possibly turn into an extreme bear, and or with the right stimulus injections and the right interaction with the worldwide banking system, these markets could find support. It just depends on what those leaders want to do. That's going to create how much bear gets in here, or does the bear get stopped and the bull come back? And what happened to that bull sentiment is it's been caved in. And I can tell you it's not a horrible case for the bull, but we could go down to 2730.77. That's going to be a half delta down in our system. That means that would be minus 3.65% in the MMT platform, which would be minus 103.54 points from the neutral zone of this Nasdaq Composite trend. One of the things is that if we break below the half delta, we've got a full delta movement down. If the bear really could gets in here, you could go down to 2627. That's all the way back down here, but I'm using our formula and I'm reading it off, so it's on tape for the MMTs, which would be minus 207 handles in the correction, which would be minus 7.31%, and they know what that means. Now, we'll be taking a look at, as if we break below that 20-month moving average, does it regain its composure on a daily level? And that 10-month moving average is going to be 2781 on the Nasdaq Composite. So you can see that monthly level, and this is what it looks like year to date. Both a 3-month bull breakout with a 3-month bear reversal, and now it's all going to be about what the leaders do. If they don't do the right thing, you go lower, down to lower support levels. It's just that simple. If the fear continues to go higher, that means that more people are getting fearful, and run on banks worldwide is not a good subject for bulls. Now, somewhere along the line, the U.S. is going to have to step up to the plate to save this bull rally. Should that be the case, we will set back up, and we'll see from a weekly level right here on the Nasdaq Composite. This is part of that overall trend. Remember that 2011 was we shorted it all the way down, and you got to remember that over here at the lows on this weekly level last year is when we put in that bear bottom, and that bull came back in, and they started off the year straight up. But look at here. We can drop lower if the news does not come good out of Europe, and if the stimulators here that work the Treasury Department and the Federal Reserve and everyone else right now, this is a bear weekly trend. You're not a bull. This was the bull when the 10-week was going up. But when you started closing below it the first week, the second, the third, and there's the fourth, and everything is rolling over, these are called bear moves or bear reversal, bear trends, whatever you want to relate to it as. So basically, the whole rally for them, they're slightly negative on the calendar 2012, and it's not a good year seasonality-wise. When you start getting into the summer period, tech doesn't really lead the way a lot. Semis are weak at that time. You got to be careful. But remember that after the summer period, you know, technology is a big deal. You have the election year, you got everything at stake for the bull, and the bear is in control. We got that short up here. We told people if you were involved in the move to get your butts out of there, because, listen, what wound it up could easily take it back down, and it's done exactly what SMF said it would do. And we have the most live daily videos with the analysis to back it up.